Welcome back, folks. Dow's down 812, Nasdaq's off 218, S&Ps are off 90. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. Don't forget, folks, Basil does an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. The way you get the opening call, come over to our website at TFNN. You're going to go right into featured content. You see the opening call right in the middle. You just hit that button, you hit subscribe. You can get the opening call for 1 month for $128. You can get it for 6 months for $595 or $173 savings, 22% savings. You can get it for a year for $995, which is a savings of $541, 35%. Now, our man, Mr. Basil Chapman, folks, okay, he had done a workshop. And this workshop was on February 13th. And the workshop was an hour-and-a-half workshop for his subscribers. Real easy to be a subscriber. Just come on over and check it out. Check it out for 30 days. You like it, you keep it. You don't like it, you get the money back. This workshop was, titled Dark Cloud Cover. And what it was about, basically, well, part of it was about how does the market take news. And when he was doing the workshop, of course, the market was still taking all the news that was out there and basically saying, hey, I want to go higher, until it didn't. So I suggest get over, check out this workshop, get his newsletter. It's going to be a great workshop. There's 5 others in there. You can check it out. Basil Chapman, what's going on?
Hi, Tom. How are you doing in this dark market here?
Well, you know what I do, so I like it. Pretty bad. But.
So, this is interesting because we've been discussing this for a while, and when the market ignores what could be bad news and goes up, it really creates this kind of this environment that says, nothing can shake this market.
Right.
And that was exactly how we were going towards the top. And one of the things that I discussed in great detail in my webinar was we've got to look at the plethora of news that comes out and how fast and how quick and how it permeates all the different media. You can hear one thing and it's a one-off. You get your big smash to the downside. Next thing you know, the market's moving higher. But when you start to see repeated, the verbiage, the words have to be the same thing over and over, that's when the market takes it seriously. And now we can see that the moment there was the increase in the coronavirus news, and it started to spread to different countries, not just one place or one ship.
Sure, Italy. I think Italy hit for most people. Even if you haven't been to Italy, everyone knows Italy's gorgeous, folks. Yeah.
And Milan in particular.
Exactly. Right.
So this is something that's being taken very seriously by the general public. But what you need is a market that was really looking for any excuse. And in fact, I've been going through the charts almost daily to show how Amazon was at a high that it couldn't really sustain. You can see, look, it went to 21.85. It was an all-time high. And in 4 sessions, 3 weeks, it's come down to 1976. And I went through all the different stocks that were really important. Microsoft was an absolute leader. And look at this, goes from 190 just 3 weeks ago, trading now at 169. It went down this morning to 167.
That was pretty quick, huh?
Yeah, that is quick. But what's really important for me is this is the first time we're actually spending time. Look, I'm showing you weekly charts. Usually I go to the daily charts. Here's the daily chart. You can see it made it top right there. You got the dreaded H, and you pull back sharply. So the whole thing about this, there are 2 things going on. One is you've got the news and the market's responding negatively to the news. And you've got the fact that within the context of the economies, I should say, you've got the semiconductor sector really being, from what I understand, there's a lot of clamping down on the activity. They've closed many fabs in China. There's a lot going on, and that's such an important part. And if you look at the SMHs, the semiconductor index, it made a top at 152. Trading right now at 135, and you can see there's key support that is coming into. So I wanted to show the weekly charts to say that once my weekly charts, you can see that the MACD's turned down, stochastics finally under 80%, but we haven't got, and this is going to be very interesting, maybe I'll take this chart that we always look at. You know, the chart that I always talk about with the dark cloud cover, this is the Dow chart, and it took only 1, 2, 3, 4, 5, 6 days to cross negative with a 9-period moving average going underneath the 14-period moving average. And now we've got in the Dow, the SMA, and the S&P, we've got negative connotations on the daily. But look at the daily chart of the SMHs. This is the first time we've got that crossover. You can see there's a little S there, and it says that we've crossed over. So now going back to the weekly charts, what it really is saying is that we've got time and we've got price to the downside. This is only Tuesday. We've still got until Friday before we get the closing price. But if we still are acting very poorly in the SMHs, as a good example, trading 135 can't bounce above 144. 143. Which is quite a way, but it's come down from 152. If it can't bounce, that's going to say that there's not very much leeway in the SMHs, because if they start to trade in the 133 area, you've broken key support, and the next low is this low right here in December, the week of the 6th, where it was at 127. So what I am saying is, I've been saying to subscribers, look, this is a time that we're expecting a pretty good pullback, and certainly in the high techs, pretty serious turn down. Very unusual market. We spoke about this the other day. We said, where on earth have we ever seen the high-tech stocks making all-time highs and Coca-Cola and Clorox at the same time? I mean, this is so unusual. And when have we seen the dollar making a new recovery high together with gold? So we've got to look at this market as if something's different. And because it's different, I think we've got time. Maybe a chunk of the price is being done right now to the downside. Maybe we do get some kind of a bounce. And look at the QQQ, the NDX 100. Look, that green line is still way above the black line. It hasn't even given a weekly sell, even close to a sell signal. So we can't just take things for granted, other than to say we were extremely overbought. If you've had your eye on particular stocks that you missed because they just shot up so quickly, make a list of the stocks that you love, because I think you're going to get them at very good prices. And there's no need to chase. I think this market's saying we've got time. I don't think they're not going to solve the coronavirus in a week or 2 or 3. It's going to take weeks and weeks. Hasn't yet come to the United States. Just be prepared to you have favorite stocks, make a list, and you'll be able to get them at much better prices. And I think if you look at it as an opportunity rather than, oh my God, what on earth is happening? The monthly charts, look at this leg C in the QQQ. S&P is still only, I don't know how to count this, it's actually a leg B. So I'm looking out for 2020. I'm still looking for higher prices, but we can't take this lightly. This is a well-deserved and needed interruption in the bull market, and I think we need to take it as an energy rejuvenating period.
Energy rejuvenating, I like it. Come over to our website at TFNN, folks. You're going to see right under feature contact the opening call. And, of course, tomorrow morning, noontime, great show. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. Come right back.